Well, joining us more now is Joshua Barker from RiverX. Josh, great to catch up with you on this Friday. Of course, the focus still very much on Donald Trump and his latest policies and his executive orders. And he's just addressed the World Economic Forum, in fact, talking about, well, he wants lower oil prices, lower interest rates.
Yeah, it's interesting. The market hasn't reacted too much to a lot of the things that he's been saying, particularly around interest rates. The bond yields didn't have too much of a reaction. They're still sitting at quite high levels, so I guess the market's a little bit apprehensive as to whether he can impact the Fed. But obviously, if his policies do drive that inflation rate lower, then there should be no reason why the Fed shouldn't continue to cut, somewhat in line with what they were initially planning anyway.
Well, I think the market's pricing in zero chance they're going to move next week.
Yeah,
I guess it's all about what's to come.
Yeah,
particularly once Trump's policies are in place and just how inflationary potentially they will be.
Yeah, there's been a bit of back and forth with the market about whether he's going to be inflationary, whether he's not. We've seen a bit of optimism this week as he's come in, just like we did when he was elected. So we're pretty much back to where the market was in early December. So it's kind of like everyone's gone on holidays. There's a bit of volatility over that period. But yeah, it's really just come back to around those key levels largely.
Do you think there's, we've got the Trump honeymoon, if you like, that's likely to end, and perhaps some greater reality is going to grip markets, given how far they've run?
Yeah, I think that's the sentiment at the moment. We saw this dramatic move upwards when he did get voted in, and now we're seeing it again as he takes charge. But again, some of the policies that he's got on are risks to global economic markets and global share markets, but they do strengthen US business activity. And, like always, his policies have been pro-US and pretty negative for the rest of the world. So that's probably what we'll see for the next 4 years, I'd say.
How's that influencing the local market? What factors are at force here, do you see?
Yeah, I think the biggest impact was his state of emergency around the energy crisis going on. So he spoke about that again last night, but he spoke about it when he came in as well. And it's about getting the oil price down, looking to local producers of oil, but most probably importantly is just the complete scrap and 180 from renewables to traditional energy sources. So Australia is always a very large sort of commodity and mining producer, so that's always going to impact that portion of our market at the very least. And I think that's probably where we've seen the most movement in the last month or two, is in those renewables, in those traditional energy sources. Obviously oil has been quite volatile, and just around those sort of policies, and everyone trying to somewhat guess what's going to happen for the next 4 years in terms of those policies.
So just what's your view there, RiverX, in regards to the energy sector locally then?
Yeah, so obviously the massive pivot back to traditional energies is something he's been very vocal about, and the rest of the world is going to continue on the same path with moving towards those EV and renewable energies. But essentially that one portion of the demand side in the US is going to be completely reversed. So it's going to have a pretty big impact on lithium. A lot of those energy, particularly wind and solar farms, they basically look to focus on storage through lithium-ion batteries. So there's a bit of a decline there as well that comes from the lithium market. His tariffs look to impact potentially that supply chain for lithium too. And it just basically creates a lot higher reliance from Australia on China, which has been very volatile over the last few years. So it's not good in the short term. Obviously longer term, we know that sort of the rest of the world's moving there, so it's not dire. But it's really going to suck out that demand from the US in the meantime anyway.
So what's your view on some of those leading lithium stocks such as Pilbara?
Yeah, it's interesting. It's a great company long term, and it's doing some great things, and it's got that support, but I do think it comes under short term pressure. It's had a little boost. Doesn't look like it there when you zoom out a bit, but it has had a little bit of a boost over the last month or two. But I think it's likely to suffer in the short term. And then, longer term, we're still favourable towards that area in general, but it might be 2 or 3 years of Trump's policies, really saturating that market until we see a true bottom out in the lithium names.
So globally, how are those policies likely to play out, particularly when you look at, well, one of Australia's biggest exports in coal?
Yeah, well, with every loser, there's winners, right? So coal has been on a decline, just like lithium has, to be fair. But I think we're starting to see the pivot in that, particularly in the metallurgical coal side of things. So with that, essentially it's used for a lot of the steel making, and obviously huge reliance on China. But with Trump, he is scrapping some of the infrastructure stuff, but I think he's more than making up for it of what he's scrapping in the renewables side, in making up for it in the AI and data centers front. So yeah, look, I think that demand will still continue. So I think coal is likely to come a little bit back in favour. And when you're sort of playing these shifts in the market, you probably want to start with the larger names. So, Whitehaven Coal is one of the largest names here in our market. You want to start with that, and then there's plenty of time to get into the smaller names as this, potential pivot for the next, say, 4 years potentially plays out in those smaller names. Some of them are down 90-odd%, so I don't think you're necessarily rushing into the smaller names. But yeah, start with the larger blue chip names, if you will, and then the sort of broadened rally will go to the mid caps, and then eventually, some of the smaller ones will benefit, particularly if that coal price becomes a lot more viable for those smaller production companies anyway.
And Josh, what's your outlook for the uranium stocks, given obviously Trump's warning on tariffs in particular, which are likely to hit Canada? Canada, a big exporter of uranium to the States, potentially could benefit Australian producers then.
Yeah, exactly. So, it's one of those ones where the tensions globally will positively impact us. A lot of it negatively impacts us and creates that more reliance on China, and then obviously hurts China. So a lot of it's negative, but that's probably one bright spot. He's talking some pretty crazy stuff about Canada being a state of America. So yeah, I think he's going to go pretty hard economically on Canada. So yeah, anything there is likely to benefit us here in Australia, and that's a sector we like. That's a sector we like regardless of short-term fluctuations. We think that a lot of the money flow is going to move there. A lot of the energy sources are going to do there, especially as it becomes more viable. But we are trying to take more of a 5 to 10 year outlook on that uranium stuff because it is so volatile in the short term. But yeah, if you can take advantage of that, then great.